Hey, what's up guys, welcome back to another video. I haven't filmed for a long time, so hopefully I'm not too rusty. So in this video, the first thing I want to start off with is the KOSPI index. So I noticed that the KOSPI has been down quite a lot since sort of what it seems like is June 19th. If I actually can get a good reticle. Okay, there you go. It's actually down like 30% from peak to trough. And this is actually, I think it's pretty crazy because this is the sort of Korean index. And any index being down 30% would be basically like a catastrophic crash. And unfortunately, it seems like a lot of Korean retail investors are also using leverage. This has been a problem. You can see here in this is a chart from the compound, and the source is Bloomberg. So basically, Korean margin loans have been exploding in 2026. And if you there was a chart that a Korean guy sent me. I'm not going to show it, but basically, as the institutional investors from the US sold memory stocks, we saw a lot of retail buying, and that's what sort of caused this margin loan increase. And the other thing is that this doesn't even um, cover the extent of the margin, because a lot of Korean investors also use bank loans. So it's almost sort of an invisible leverage. And after seeing KOSPI go down like 30%, it's very likely a lot of these investors either got liquidated, or they had to basically sell to cover most of their positions. And unfortunately, it seems like to me that most of this downturn is being held by the Korean retail as well. So it's just something to look out for. If you're invested in the Korean market, which I don't think you are, but also at the same time, this is going to cause um I think it might cause some problems in the memory sector. We'll see how that eventually sort of materializes. And if you actually look at KOSPI index holdings, I didn't know this. It's basically just a Samsung ETF, which is pretty funny. You can see Samsung Electronics is number one, SK Hynix is number two, and you have some motor companies here, some banks, and just more Samsung. So it's like a Samsung ETF. So there you go. Now, it's also possible that a lot of investors in the Korean market are selling to move their money into the US market. So the reason I think this might be the case is, by the way, this is SK Hynix. It's down like what seems like almost 13% today, almost 14% today. And if you look at the KRX versus the US listed SK Hynix, the US listed ADR is actually up way more than the Korean listed SK Hynix, which is, there's a reason why I think that money is moving out of the Korean market and into the US market. And the delta is like 23%. No, 28%. And that is quite a substantial amount of delta. We normally do not see this. It's basically, I don't think it's necessarily trading on its fundamentals. I think it might be trading on speculation. So there's a lot of speculation going on in the memory markets. Let's see how Micron is doing. Micron is also down. So I'm not saying that this is the end of the memory cycle. In fact, if it might even be a good time to trade the memory sector. You can look at the 1 day charts. Now, what I would personally wait for at this point is for the 1 day RSI to be at 30. But I'm not saying that I will enter it. The other way that I think you can sort of enter it is to wait for the MACD, this blue line, which is the shorter dated moving average, to start to cross over the longer dated moving average. The MAs might be different for you, and you just want to play. I think the breakout if you want to trade the memory sector. I think right now you sort of want to wait for a better entry on the memory sector, which I think you will get. Because once again, I think there's a lot of speculation going on in the memory market, and there will be an opportunity. So, what am I sort of bullish on in terms of my own personal portfolio? I'm actually bullish on basically almost all the Mac 7. I think NVIDIA, Amazon, Microsoft are a pretty good, stable place to play right now, or rather to invest, not to trade. And the other one is also Palantir, which I guess I'll try to get into it. So, technically speaking, NVIDIA is sort of a consolidation zone right now. They are almost sort of breaking out, but I'm a little bit cautious on this breakout because it seems like there isn't too much momentum into it. I think the market right now is cautiously consolidating to NVIDIA by buying, and we'll see if this momentum can keep up. If you are trading this, I think you might want to wait for the RSI to hit like almost a 65 or 70 before you trim or sell. That's what I would do if I had a massive position. Um, the other thing is Amazon as well. So Amazon, basically they have a lot of data centers, and if I'm not wrong, I'm gonna check this out. Yeah, Amazon's doing this thing where they are trying to expand again, and you can see that the free cash flow is suffering. So that there might be a case where their free cash flow uh, continues to go down, but the stock might go up because the market might just be buying stocks based on capex, which I don't personally agree with, but the market's going to do what the market does. Um, yeah, you can see that they are acquiring a lot of debt here, and their free cash flow is massively going down. Now, the other thing is that their net income is also, it's still going up. So this might be a Q1 thing because of, my guess is it might be taxes or something. Um, yeah, I'm not a very good fundamental analyst, so I'm gonna move on. Next up, we have Microsoft. So Microsoft is doing a lot of cuts right now in terms of their labor force, and I think they might be too big of a company, and they might have done it too much for it to massively benefit the company. But I still don't think Microsoft is down for the count. I think they are likely going to recover because they're still a free cash flow machine. They're still improved their free cash flow by about 10 billion since the last quarter. Now, there is one concern I have because if you look back all the way, and this is something I pointed out in the last episode with the capex, if I recall, this has been a long time. Their free cash flow is still down about 5 billion year over year, right? So once again, if the market is going to price stocks based on the amount they are spending, then we might be able to see Microsoft benefit from that because their SG&A. No, that would be capex. Uh, capex would be operating minus free cash flow, right? So the delta of that would be like 31 billion, which is the same as the last quarter and higher than Q1 of last year, which is 17. So, if the market's gonna price it on that, then Microsoft's probably gonna do very well. Okay, so those are the stocks that I am bullish on in my own portfolio. The next up is stocks that I am trying to trade, right? So hopefully I can be able to give up some setups here. So the first stock is Robinhood. I tried to enter this today, which is 15 July. Unfortunately, I didn't get it. Um, so I think Hood right now is something that I would like to own, but I don't, and I'm willing to sort of trade this because if the trade doesn't really go well, then I still want to own it. That's sort of the way I'm sort of approaching this. I know it might not be the best for some people, um, and you know now I'm entering this. I'm trying to enter this with stop losses as well. So what I was trying to do was to buy Robinhood at like 12.50 because I was looking at the VWAP. And the VWAP strategy did work. Unfortunately, I just wasn't able to enter it because I wanted to buy it at like 112 dollars and 50 cents because that was where um, Hood dipped right here at about 9:50 a.m. Unfortunately, I didn't get it because Hood didn't do like a perfect double bottom. It still had some positive momentum, and I wasn't able to enter it, and I was trying to sell it at 114. So that is about where the VWAP was at that time. So that's sort of how I'm trying to trade some of these stocks based on the VWAP here. So I didn't get to enter this, but I'll keep trying. But on sort of the long term, and I'm at the risk of being very wrong here. Um, I'm actually kind of more bearish on Robinhood because I've been trying to wait for it to go down to about 100 before I start to have a invested position, not just a trading position. Um, the reason for this is because the money flow index is kind of at its high right now, and I was sort of comparing Hood to SoFi, which might be a mistake, and I was looking at the 200 MAs, right? So Robinhood was able to cross the 200 MA, whereas SoFi was not, and this sort of shows the difference between the momentum that between these, and you can see that SoFi has already started to break down. Now, mind you, SoFi is more tied to the banking sector, whereas Robinhood is tied to more of the brokerage sector. So even though they're kind of similar, they are both in finance. Uh, they are going to trade, slightly more different. So in this case, what I sort of found with Robinhood is that it likely has a higher beta than SoFi. So I'm trying to wait for Robinhood to break below the 200 MA before I start a position. I once again, I might be very wrong, but I don't think it's likely to go back all the way to all time highs at 153, because based on I guess the rate cuts, which I really don't think the rate cuts should impact Robinhood, but based on the rates not being cut, I think Robinhood might continue to go down. Now, Robinhood is very different because they are not tied to rate cuts like SoFi, but I'm just basing it off the RSIs here. So I might be wrong. I might be wrong, and I may not be able to enter Robinhood at 100 under 100, but I'm still trying. So I'm still gonna wait for Robinhood to be like under 100, around 90. I think will be a sweet spot, and hopefully we can get it there. If not, then well, I missed out. The other thing I was trying to trade was also Shopify because Shopify has some pretty good fundamentals, which I'm going to try to pull up here. And the other thing is that the short term trends were pretty volatile. I was able to trade this on last Friday. I got in at 126, and I sold it at 130, which was, I guess, pretty lucky because it just had a spike there. It wasn't even 15 minutes, and I was able to get out here. So yeah, that's sort of what I'm trying to do. Um, I was also looking at the VWAP, so let's go back to one. Okay, there you go. I was also looking at the VWAP if I recall. So I got it on 126, must have been pre-market, and yeah, there's a VWAP here. So I'm trying to trade the VWAP because that seems like something that's is very popular right now. So we'll see if that works. Very very small volume, so I'm not gonna make too much money, but it's just something I'm trying to trade here. So if you look at Shopify's annual fundamentals, which is what I was looking at, revenues going up like 30%, and they basically have no debt because they don't stock any inventory. They are basically just a software play, right? And they're doing very well fundamentally. I mean, look at the free cash flows; it's like 2 billion. So I'm trying to sort of trade Shopify. So that's the other trade here. The other thing I'm trying to trade is also Meta. So I bought Meta at about 600 and I sold it at like 675 or 665, and it just kept going up. So I think this rally might be a little bit unsustainable. You can see that there is a sort of downtrend channel going on here, and once again, I don't really um mind missing out on Meta, so that's why I am more so sort of trading it. I know you know um a lot of people are very bullish on their AI. I personally don't think there is space for another LLM. I might be wrong there. Uh, and advertising, I don't know, because Facebook is able to do a lot of money in advertising, so I can't say that advertising is necessarily going away. So I don't know. I'm just sort of I don't really care for Meta. I guess that's sort of why I decided to trade it and not hold it. Once again, with Meta, I'm sort of waiting for it to go below that 200 SMA. That would be a great entry again if it does. Or maybe I might be completely wrong in this video and it will go back up. I don't know, but that's just what I'm looking at. Okay, last on the list now. I put this last because it's very annoying to talk about. It's BMNR. Um, so I bought more today after market at about 1585, which is currently where the overnight is. And I just want to go through it because it had kind of a strong rally over the past few days. So if you look at from the bottom, Tuesday, 30th of June to the top today, it's about 32% up. So if you were trading it, well done. And if you look at Ethereum, this is the 1 day chart. It seems like we might be at the end of the short-term rally. So I would be a little bit concerned now. The reason why I'm buying BMNR at this price is because the stock price is dropped below Ethereum today, and what I think and what a lot of people seem to think is that BMNR diluted ATM at the money. So that's why I bought it, because there might be some alpha if you do that. BMNR giving you an opportunity to buy Ethereum at sort of a lower MNAV, and I'm not going to discuss whether that's good or bad. So I bought BMNR today, and if you look at Ethereum, short-term rally is might end, but if you look at the long term, RSI just started to break out here. So at the start of the video, I said to wait for something like this to happen with the other stocks that I'm bullish on. Uh, so this is what sort of you want to wait for. And unfortunately, I don't think there is too much momentum in Ethereum. It seems like, once again, a very positive but very slow consolidation over time, which is good. Okay, for Ethereum's case, I don't mind this. I just want us to hit back to 2000, and I don't even care if we just stay at 2000 for like 5 months, because the possibility is that things could get very much worse if we do not stay at 2000, if we do not build like some sort of base. And the channel I'm sort of looking at for Ethereum is around 2000 to 2400. I think that would be a very, very, very good base. And you know, I think if okay, let's do okay, so that would be around like a 22% channel. And if you move it back to BMNR, let's go to the 1 day charter. That would be around, it would be great if you can get 20 or 19, right? If BMI dilutes, maybe we can get a great consolidation at 18. I don't mind that. We just need some sort of base here, some sort of consolidation. But if we do continue to go down, then I will buy a little bit more. So what I sort of suspect is we could go down, I would say, to like $14 um, if the MACD sort of breaks and if the market does another sell-off. And yeah, if you look at the MACDs, by the way, that the moving averages are below that midpoint, the zero line, which is technically still a bearish indicator because it signals that there isn't a lot of positive momentum. Now there is some positive momentum, but it's not a breakout level of momentum, right? So we are technically still in the bearish phase. We are technically still trying to build a consolidation zone, and I think it's great. I think it's great that we might not hit any lower than like $13, which was, I think, pretty scary for a lot of people. I just wasn't looking at my brokerage, so you can see that even in my application, I built in a thing so that I don't look at BMNR. I was still adding to BMNR, but I just for psychology sake, um, I'm just not looking at it. Now these are all in the same broker, and I do see the profit and loss, but just having like a psychological level, psychological way to just break this out was pretty helpful in just holding BMNR. Um, so I just had to implement like what would you call it? I don't know, KGB level psychological blockage to hold BMNR, right? So yeah, it's I don't know why I ever got into BMNR, but there you go. So that's how I'm holding on to BMNR. So there you go. That is this video. I can keep on talking for another hour, but I'm not going to. Thank you for watching. Like, subscribe. See you in the next one.